Hello everyone, Dave Landry here from DaveLandry.com. This is Trading Simplified. So what are we talking about? Well, I'm going to skip the methodology and action this week. I did a long presentation the week before last on my YouTube channel under the weekend charts, and you can find that if you go to YouTube and then look for @Dave Landry. So that'll get you up to speed on how we're faring during this little bit of a downturn or choppy markets, whatever you want to call it. I want to continue my series on Jesse Livermore. We're now up to part 17. I thought we'd do this really quickly, but it's just taking a while to get through it. Housekeeping, I do take requests. If it's something you want me to cover, you can go to davelandry.com/contact and let me know. My Twitter is @TFollowingMoron. My TikTok, I believe, is TrendFollowingMoron if you want to follow me there too. And YouTube, again, is Dave Landry. I do a weekly webinar every week, or usually every week on Thursdays. And that's still a live show. If you want to attend live and ask questions and bring your favorite stock picks or crypto picks, I would love to have you there. If you want the slides from this presentation and all the other slides combined, go to davelandry.com/stockcharts. All right, let's jump right into Mind the Trade. And lately, as you likely know, we've been talking about the wisdom of Jesse Livermore. And I'm pulling mostly from Reminiscence of a Stock Operator. And as I've said quite a bit, I'm also using the biography, which is excellent, by the way, by Smitten, and a little bit also from How to Trade in Stocks. And those two, especially biography, are helping to kind of give me a little background, a little color commentary into Livermore. Now, when we last left off, just real quick, we were talking about the fact that it's important to know trading so you can recognize when Livermore is behaving badly. Livermore says a lot of good things, a lot of smart things, but he also does a lot of dumb things. And I'm finding that as I get a little further into the book on this, God knows how many reread, but on this 100th reread, further in, chapter 20-something or whatever, it seems like he does begin to wise up. But it's important for you to, I would say, reread it every year, because each year you're going to be a little smarter and it'll make more and more sense. But do recognize that he does have a lot of bad behavior. He does blow up a lot due to bad behavior. Do learn to do what he says and not necessarily everything that he's done. In my last presentation, I talked about the fact that he over-leveraged, which he could have easily blown up again, and he does blow up frequently. He became married to his positions, which were a really bad thing to do in spite of all his preaching. And then he also used some schemes to unload his positions, which we can't do as small private traders. So let's jump into Reminiscence of a Stock Operator. Now, let's talk about Livermore and doing what the tape says versus what you think should happen. I was long of TT all the way up. That's a stock, Tropical Thunder or something, or Tropic Thunder, huh? That he was long. In fact, I held on a little too long and let some of my paper profits get away. Do you wish to know why I did? Because I thought the TT insiders would naturally do what I would have done had I been in their place. But that was something I had no business to think, because my business is to trade. That is, to stick to the facts before me and not what I think other people ought to do. So this reminds me of something I say often: believe in what you see and not in what you believe. And another thing I often say, and this is not an original thought, but it's an old Wall Street adage: strong opinions loosely held. So whenever I go into a stock, I am convinced that it's headed higher, but I still put in a stop just in case I'm wrong. I think the clearest summing up of the whole thing was expressed by T.F. Woodlock when he declared, "The principles of successful stock speculation are based on the supposition that people will continue in the future to make the mistakes that they have done in the past." Later in this presentation, I'm going to talk a little bit about booms and how people behave in boom periods and also bust periods, and how it becomes a bit of a crowd psychology in human nature. And that human nature just never changes, and that's why technical analysis continues to work. Now, Livermore talked a lot about stocks being manipulated, and at first he seemed to be a champion of it, but the manipulation that he was talking about, as I got a little further into it, was manipulation where you begin to push a stock higher in an attempt to draw in some additional buyers. Now, I once had a client, or a potential client, I guess I should say, that kept emailing me, and he was frustrated because he thought the Forex market was out to get him. And I didn't know how to tell this gentleman, but I doubt that the big institutional players are trying to pick off a one-lotter, like I'm guessing he likely was. But he would type pages and pages and pages, and after a while, it just became too much to read. And I tried to explain to him, yeah, all markets are manipulated. Many, many years ago, I worked with a stock trader. I was blessed to work with a stock trader who had been around for a long time, and he often would say that prices don't move, they are moved. So what you need to do is figure out which way the manipulation seems to be happening, and as we'll discuss in a few minutes, maybe a possible reversal from a manipulation, and then look to play along those lines. In other words, follow the tape. As a matter of fact, it is well to remember a rule of manipulation, a rule that Keene and his able predecessors knew well. It is this: stocks are manipulated to the highest point possible and then sold to the public on the way down. So his point here is that people like Livermore and pool operators, a pool operator is somebody who's really buying up a stock and pushing it higher and higher, they don't get top dollar on a stock. They ended up selling the stock on the way down. So that sort of gives you a constant supply of stock on the way down. And then later on, Livermore's going to talk about pushing it up on occasion. So it's possible that manipulators, as a stock is dropping and they're looking to unload it, they might actually go in and actually buy some stock to create a bit of a rally. And we'll get to that in 1 second. But the bottom line is, just know that markets are manipulated, and you could use this to your advantage. And one way would be to possibly look for fake outs, then look to play the reversal. For instance, an opening gap reversal, or as we call them, ogres, intraday, and then maybe something like a TKO for position trades. A trend knockout is when you have a strong, sharp one-day bar down, and that could possibly be manipulation, but we don't care. But the bottom line is, we know from a psychological perspective that players are getting knocked out of the market in a sharp sell-off. What created it could be manipulation, we don't know. But that's just one way that the market could be manipulated, and we could take advantage of it. So let's talk about Livermore on honoring your stop. The chap who's compelled to lug a corpse a year or two always loses more than the original cost of the deceased. He is sure to find himself tied up when some really good things come his way. Now, in this case, Livermore is talking about being in a stock and hanging on to it even though you should have exited a long time ago. Years ago, I was very friendly with a broker, and he turned trader, and this was during the late 90s, and probably more specifically, late 1999. And I remember calling him up one day because we were just absolutely printing money, and I asked him how he was doing on stocks that I was mentioning, and so on and so forth, because he had been doing really well on them. And then he told me, he goes, well, I didn't take those new stocks because I'm nursing a bunch of bad positions. Now, I don't know how you nurse something like a stock. I guess Greg from the Fockers could maybe tell you a little bit more about that. Anyway, let's talk about Livermore on the tape versus the news. One thing I strongly believe in is that news is noise. I'm not saying that news doesn't affect markets. It does. It's just that a lot of times the reaction is the opposite of what it should, or in many cases it's just flat out muted. You have this big earnings announcement, and all of a sudden it's a fantastic earning announcement, and the stock actually goes down because all of that was already baked in the cake. So news, for the most part, is noise, and I say for the most part is because it doesn't always do what it should do, what you think it should do. And I think that if there was a way to trade off of news, a lot more journalists would become traders. Accurate and reliable information should be given to the public. But what I meant was that the tape did all that was needed for my purpose. So he was putting the stock up, so to speak. He was buying the stock in an attempt to sell the stock later at hopefully a higher price. And his point was that the newspapers would likely make up some reason for why the stock was headed higher, and then that would beget more buying. As I said before, the reputable newspapers always try to print explanations for market movements. It is news. The readers demand to know not only what happens in the stock market, but why it happens. So this reminds me of what I wrote in the Layman's Guide to Trading Stocks, page 16. Wall Street myth number 7. There's a reason the market is going up or down. It amazes me that the media will tell you daily exactly why the market went up or down. They infer that there's always a direct reason as why stocks rise and fall. By this logic, all you have to do is learn the correlations. The problem is often there aren't any. On Monday, the market dropped because oil prices rose, and that's a quote. On Tuesday, oil prices reversed, but stocks ignore this and continue to slide. The media quickly comes up with a new reason. On Wednesday, oil prices soar, but stocks ignore this and have a big rally. The media finds another reason to explain this, once again ignoring the facts that stocks rose in spite of rising oil prices. On Thursday, oil trades only marginally higher and stocks implode. The media then returns back to the rising oil reasoning. More often than not, there is no reason why stocks rise or fall. They trade on emotions, period. Don't confuse the issue with facts. So again, Livermore was trying to sort of manipulate the market by buying under the hopes that some sort of story would be created from the media. So news is noise. Be really careful if you try to factor news into your trading. I ignore all news. And I actually did a segment where I'd say, read my lips, ignore all news. Doesn't mean that news doesn't affect the markets. It does, but their effects are often muted or the opposite, or as I just read to you, the media just makes something up. At the same time, I realized that the best of all tipsters, the most persuasive of all salesmen, is the tape. Amen. A rising market often begets more buying because people don't want to be left out. So Livermore's point was that he didn't really have to rush out and do something illegal and make up something. All he had to do was put up the stock, so to speak. So Livermore put up a stock so he could begin unloading, and then he repeated the process on the way down. He would buy some stock on the way down and try to get the ball rolling once again so he can unload even more stock. So the takeaway here is just know that markets are manipulated, and you want to err on the side of that manipulation. Now, you never know exactly how and when and why they're being manipulated, but on the short side, let's say a market begins to rally a little bit and it's in a solid downtrend, that might actually be a new shorting opportunity. And the same thing happens on the upside too, with something like the aforementioned trend knockout pattern. Sometimes after you've taken all the stock that is for sale, it pays to rush the price up. Sometimes after you have taken all the stock that is for sale, it pays to rush up the price sharply to have what might be called little bull flurries in the stock you are manipulating. It is excellent advertising because it makes talk. It also brings in both the professional traders and the portion of the speculating public that likes action. So again, markets are manipulated, and sometimes an institution might be looking to buy a stock, and they'll actually sell the stock first in an attempt to crack it, to push it down so they could buy it back more cheaply. And that's one reason that I like to trade the pullback pattern. And again, that would be similar to something like a TKO. As long as the price went up on my buying, I knew I was okay. So his point was, as he said earlier in the book, that he would buy something and keep buying as long as it went up because the market was healthy and there was a demand, and he wanted to be on the right side of the market. Now, Livermore talks a lot about human nature and how human nature never changes, and we'll get to that in just 1 second in more detail. So he was paid to manipulate a stock, so to speak, by buying it to push it higher, and it just wasn't working anymore. So he told the gentleman that he was working with, and the guy just didn't want to hear the bad news. You would think, wouldn't you, that shrewd men who have made millions in their own business, in addition have successfully operated in Wall Street at times, would realize the wisdom of playing the game dispassionately. Very important for you to be clinically dispassionate in your trading. And it's not easy. You feel like the market's headed in one direction, you get in and it heads the other. You just have to get out of the way. It, spelled with silent SH, happens. Well, you would be surprised at the frequency with which some of our most successful promoters behave like peevish women because the market does not act the way they wish it to act. They seem to take it as a personal slight, and they proceed to lose money by first losing their temper. So, again, this is trading psychology rearing its ugly head. So the point is that even manipulators must submit to the tape, or in other words, no one is bigger than the market. And the manipulation could actually create some tremendous opportunities for us. Let's say somebody is trying to push a stock higher and then it begins to roll over, as does the overall market. Well, that could possibly create the mother of all shorting opportunities. Prentice was the person he was helping manipulate a stock by buying it. So he told him, Prentice, I can feel very plainly the pulse of the market. There is no follow-up in your stock. It is no trick to see just what the public's reaction is to my manipulation. Listen, when Pete Products is made as attractive to traders as possible, and you give it all the support needed at all times, and notwithstanding all that you find the public leaves it alone, you may be sure that there is something wrong, not with the stock, but with the market. Amen. How many people preach about buying a stock because it's a good company or its value, etc.? That's fine, but unless it goes up, there's no reason to buy it. And for that matter, it's very important to buy stocks in bull markets because you get a little win, obviously, in your sales. There's absolutely no use in trying to force matters. You're bound to lose if you do. So Prentice did not want to hear the bad news. And the bad news was that nobody wanted the stock anymore, in spite of all of their efforts. So you must remember that no one is bigger than the market. The market's going to do what the market is going to do. And as trend followers, we let it do what it's going to do, and then we figure out a place to get on board should a trend either be emerging or established one appears to be resuming. I suppose Prentice shares the delusion of thousands of others who think a manipulator can do anything. He can't. So again, nobody is bigger than the market. Now, Livermore talked a lot more about human nature. In every boom, companies are formed primarily, if not exclusively, to take advantage of the public's appetite for all kinds of stocks. I was involved with a website many years ago, and we were looking to take advantage of that .com thing too, although we were a little too late. But that's another story. That's a 2-drink minimum story. Anyway, also, there are belated promotions. The reason why promoters make that mistake is that, being human, they are unwilling to see the end of the boom. So when, not if, we get into another crazy bull market, just realize that it won't last forever and have a chair ready for when the music stops. Moreover, it is good business to take chances when the possible profit is big enough. The top is never in sight when the vision is vitiated by hope. So here are the takeaways for this week. Now, you can't manipulate a market much, and I say much because every trader has an impact on the market. As Mark Douglas once said, all it takes is one a-hole to screw up a perfectly good trade. And that's a little bit deeper into trading psychology, but that's something that you should never forget. But anyway, you can take advantage of manipulation by reading the tape. If you discover there's a trend in something or a trend transition, then it's possible that you can get to the right side of manipulation. Let's say something like an aforementioned opening gap reversal. The market maker brings the stock down to a very low price on the open, and his thinking is because he's got to buy it from you, he's going to lower the price so low he could buy it from you. Suppose you have to dump this, assuming you have to dump the stock, of course, you and many people like you, he'll buy it at such a low price that he knows that he could flip it out later in the day. And so in a case like that, let's say you're not already long the stock, you could jump on the side of the market maker and play those opening gap reversals. Again, human nature never changes. Fear and greed often show their ugly head in the markets. And again, you need to listen to the tape. Don't fight the tape. That's one of the few Wall Street adages that's true. Nobody is bigger than the market. And again, human nature never changes. It bears repeating. Well, that's it for this week. If you need the slides for this presentation and all three of my books in PDF format, you can go to davelandry.com/stockcharts. You can reach me at /contact. If you want to join me on Thursday /webinar, there's my Twitter, and my TikTok is Trend Following Moron, and YouTube is @Dave Landry. I want to thank everybody for watching, and may Trend be with you.